Hello fellow traders and welcome to another technical analysis video brought to you by Orbex.com. You're now surfing the waves with Richard. Today I'm on the crude oil chart on WTI West Texas Intermediate, and the reason why I decided to make a video on crude oil is because WTI and crude oil itself, even Brent, are getting a lot of attention these days. This is um, mostly, obviously, precisely because there's a very important meeting gonna happen, gonna take place tomorrow on the 20th of April, when obviously 20 OPEC members and non-OPEC oil ministers will actually meet in Jeddah, Saudi Arabia, right? And the topic is obviously, and their main focus is to discuss the oil production cut deal. Okay. Now, the point is that they will decide whether or not the production cut deal should be extended into 2019. So either it's a yes or a no, and that will obviously affect the price of the price action and the actual price per barrel of WTI. So hence the reason why I'm on this actual chart right now, and I'm gonna attempt to combine somehow the, the technicals with the fundamentals, yes. So as you know, Elliott wave analysis, which is actually my specialty here. Elliott wave is a Elliott waves are actually fractal by nature, but also they come natural. It's a natural process that actually happens in cycles, which reflect in the swings reflect in market prices, yeah. So what I want to say is that this meeting tomorrow on April 20th, 2018 is actually the first meeting before the actual decision in June later this year, in June 2018, which the meeting will actually take place in Vienna. So, what I'm seeing is the following. I'm seeing a possible, let's say, for instance, um, I'm seeing this squeeze right here as a corrective structure. And I'm going to explain to you exactly why. But before I do that, I'd like to show you, and basically, I'd like to show you a couple of things, and especially I want to focus on the main picture right here. So let me just do this. Yeah. Now the point is that this is a chart of crude oil WTI from 1946 until present, and I've labeled it, which is basically very easy to recognize. You can actually see it from here. The grand supercycle red, which is A, is formed out of supercycles A, B, C, and there we go, purple A, and then W, X, A, B, C, and Y. And the reason why I'm labeling this as an A, B, C and not as a 1, 2, 3, 4, 5 in an impulse is because for a second wave um, to be here instead of B, second wave needs to be proper zigzag, first of all. Secondly, it took this corrective structure, the corrective piece, way too long to develop. Hence the reason why it's not a it's not a second wave or wave two, and it's in fact a B wave, right? Not to mention that it's followed by one, two, three, four correction, and then the fifth wave, the most powerful one, right before the 2008 2009 recession. Yeah. So basically, when crude oil hits all-time highs. So this is I labeled it as a end of C, but also end of ABC, super cycle purple, and thus ending a grand super cycle A red, and that's when it's actually started falling. And as you can see, I'm labeling this wave B in a grand super cycle as a correction in a simple ABC move, right? So what I'm going to do is I'm going to focus right here on this entire drop that actually started. So let me go on the charts and just go to the weekly chart right here. And as you can see, I'm labeling the fall from 2008 until 2009. I'm labeling it as an A wave in a cycle degree. So wave A, black is the cycle wave. Now, obviously, the entire picture is formed out of three moves, as you can actually see: A, B, and then C, and then obviously this B, as you can notice, I am labeling it as a triangle, yeah, and this super cycle, sorry, cycle wave B black, followed by a proper impulse, five wave sequence, one, two, three, four, five, in wave C, which basically um, started unfolding from 2013. Yeah. So um, now, giving that said, the entire cycle is basically has ended, right? As an A, B, and then C. So this will reflect this bottom, according to the um, larger picture, will reflect this red B grand supercycle. And from this point on, you can actually see that it's actually going on. Now, this is a long-term chart, and this is the weekly chart. Yeah. So right after that, we can actually see that we went on the upside. Crude oil went on the upside right here, but still not a proper impulse move. I mean, a proper five-wave sequence, right? So this is actually telling me something. Now what I'm gonna do is I'm gonna focus on this piece right here. So let's go to the daily chart, and as you can see, I have it labeled right here. But before I do that, I'd like to um, point you out on this move right here. Yeah, the C wave, and we are exactly at the 50% of it, right? What a coincidence, synchronizing with this fundamental event and very highly anticipated event. And the next stage is basically 61.8. Not to mention that we have from W and X, we have the 100% right here because we surpassed the 61.8. So back to daily chart right here. Now, how I'm labeling this daily chart on crude oil is basically as an ABC. So this is the first leg of the entire piece. So green intermediate A, and then we started basically this started correcting. And the way it corrected is in a running flat, right? Like this. So we have a running flat in intermediate B red, green, followed by an ending diagonal in intermediate C green, thus completing the entire ABC intermediate cycle, thus completing obviously the um, primary W purple. So we have one piece until now. I mean, this is a complex structure. It's double free, right? I mean, W, X, Y. So then it started correcting here. And when it started correcting, basically, I made a post right here, which was based on January 9, 2017, when I said that we're about to, we could possibly be having a correction, then more upside, right? So let me just load the new bars right here, and you can actually see what happened. Yeah, we have basically this corrective piece. Now, this corrective piece developed very in a complex way. So uh, the explanation of it, I mean, the explanation behind, the reason behind this type of complex structures, the reason why they are developing complex structures is because, let's say for instance, we have a main move, yeah, we have an impulse coming from, the movement comes from the upside, and then it starts correcting in a free wave move. So this is correction. This correction, this correction is correcting that move, but this correction is correcting this correction, right? So in other words, there's a conflict of degrees. So when a corrective structure is correcting a corrective, then you can expect obviously a complex type of structure. Hence the reason why this developed as a W, X, and then ABC. So we have a flat right here and a zigzag right here. So hence the reason, I mean, this is basically a double free and primary X purple. Moving on, we still have basically the last piece of this WXY of this entire W double free corrective, right? So what we have is so far A minor, then B, and then the extension happening in in minor C, which is this light blue C, thus completing the first leg of the ABC. So we have an extension, 1, 2, 3, 4, and then the overshoot. Right after that, crude oil started correcting again, right? So what I'm gonna do is I'm gonna focus on this. So as for the Fibonacci levels, let me basically say for instance now my 2 cents, and of course everything that I'm doing here, the way I'm analyzing the charts is to be treated as simple market commentary. Everything that I'm about to show you or say is not designed to induce or influence you in any way, so you should just treat it as simple market commentary and nothing else, right? This is not an investment advice. So that being said, and that's with that out of the way, let me just continue here. Now, uh, we can actually see how this is going. It's in a rising channel and breaching it, and it's only normal for the last pieces to overshoot and cause a temporary breach, thus making traders think that the price action would go up, but instead um, sometimes it actually drops. So let's say, for instance, Fibonacci extensions from W and X would determine basically either 100% or 61.8. 61.8, we already passed it and it gained support right here on it, right? Now, this peak did not move until the 100%, not to mention that we are exactly at the 50% levels from the actual main move, from the drop, right? So from 2013 until 2016. So 3 years of downtrend has been corrected in 2 years, right? And we are exactly at the 50% Fibonacci retracement of that bearish move. Let me go back to the daily chart right here. So this is kind of important, I would say, because 50% is usually a major point of interest for both buyers and sellers. Yes, on trends, on reversals, on correctives, etc. Now, of course, the 61.8 is much more important because this reflects the golden ratio. But the way this is located right here, the Fibonacci extension, basically, let me just delete these things. Okay. All right, now let's continue. So we have a Fibonacci extension from W and X. We surpassed the 61.8, we're going to the 100%. Now this 100% is actually the between 70 and 71 levels. Yeah, so this little piece right here. So we can actually see that we have a zone right here. This zone and we have the next zone right there. Yeah, these are both points of interest, and we can see what's happening right here. We can notice this zone right here. The price actually stayed a long time um, between 55 levels and 42 levels, 40, 42. Yeah. So this is exactly, um, the market moves in cycles, and for the cycle to be able to continue, have a continuum, basically to have continuation, it needs to correct, right? So the market cannot go in a straight line. So this parabolic move at one point would need to be corrected. Now, the only thing is that for this to be treated as the entire correction, this move down right here, a correction would never happen in just in one move. Yes, especially an intermediate degree. As you can see, no correction actually occurs just like that. So I do believe that the oil market is still in a correction, temporary correction. I do see more upside in my personal opinion, but I mostly see one more leg and then possibly going further. So let's see synchronize these fundamental events. So we have 2 days. Tomorrow, the Jeddah, the meeting in Saudi Arabia in Jeddah, and in June, basically we have the meeting in Vienna, right? When so this meeting for tomorrow, they will discuss the oil production cut deal, yeah, and they will decide if whether or not they will extend it into 2019. Now, the actual decision, of course, will take place in June 2018, right? So this is just a preparation meeting, uh, in which, of course, multiple interests will be discussed. Now, how I'm seeing things is, if I were to make an attempt to synchronize this fundamental events with with the technicals, I would do it like this, right? We have 2 points of two Fibonacci extensions, 100% and 61.8. And the way this is correct, and we have one leg on the downside, and then we started it started basically moving in, not sideways, but still, in my personal opinion, still correcting right here. Okay, so let's say for instance, this move on the upside was indeed posted at one point. Let's say, yeah, right here on May 10th, 2017, right? So almost 1 year ago. So as you can see, this indeed went on the upside. Now, I do believe that the oil market could be starting a correction. It enjoyed a parabolic move. Now, the way I'm seeing the structure, the actual corrective structure possibly developing is obviously the focus is on the 100% right there on the upside because we're very, very close to it. And I'm gonna zoom in to the even for the 4-hour chart so you can expand it. Now, just like historically we have this running flat right here in this intermediate B. This is what could occur. So let's say we have the 61.8 right here, but we can actually, I mean, crude oil can, let's say for instance, if I would draw a line right here to possibly synchronize this move, if we were to have like this, yes, I mean, W, X, and then A, B, C on the downside for this Y, that's completing the B, right? So let's say for instance, in this scenario, this will be a running flat scenario, right? So this doesn't have to go beyond the end of W, and because this move right now is going past the start of W. So in a running flat scenario, this doesn't necessarily need to create another a lower low, basically something lower than 58.40. So if it's a running flat, then that's the scenario. If it's not, and this is destined to, this could be destined to go even lower, the 50% obviously would be in focus, and which is basically this uh, previous tops, right? When price vibrated right here aggressively. So in that type of scenario, we would have an expanded flat type of structure, which would imply obviously the moves to be much more aggressive, right? Especially the C leg in this move. However, I'm not so eager to, I mean, to draw conclusions or to jump the horse here. Just trying to keep it simple right here. So, in other words, um, as you can notice, my focus is on the bearish side for now, and the reason why, I mean, you must be asking yourself, why is this guy thinking like that, right? So that's why I'm gonna go to the 4-hour chart and focus on the corrective piece, right? The reason why I labeling this as a W minor and not basically as an A is because the way this develops. So we have a free wave move. We don't have an entire correction right here, so hence the reason why this false move, a temporary interruption, typically for a wave X. Then we have A, B, 1, 2, 3, 4, 5, and then we're going in the upside. So we have a leading diagonal right here, as you can actually see it. So A, B, and then ending diagonal right there. So we have three waves on the upside. So A, B, C, determining the structure complex. Now you can see that the structure is developing in a rising channel, typically corrective. And what it's doing is, let's say for instance, if this would, if this was destined to go on the upside and basically just shoot all the way up there, right? Um, let's say for instance this would be a one, but it's a free wave move. Let's say we accept it and we say it's possibly going to be an ending diagonal. But this to be the second wave, this triangle doesn't fit in a second wave. Triangles do not form in wave two, so it's invalidated, right? Let's say, for instance, we want to force an ending diagonal on a larger scale. We say A, B, and then C for an ending diagonal. This is a 1, and this is a 2, which would fit, right, as a WXY. But what about this? What about these fibs? Yeah, we'll need 1, 2, and then 1, 2, and then really, really shoot. So that is possible. However, let's take a step back and basically take a look at the daily chart when we can see this. Yeah. So the way, I mean, I'm not saying it's not possible, but I'm saying that the way this is crawling on the upside, it's like it's possibly signaling a drop, right? So remember that, I mean, I'm sure you guys know that when a rising channel occurs like this and you have an overshoot on it, especially when it's, I mean, the structure is rising, it's not decreasing, yeah? So it can point on the upside. It's actually rising, so it can basically do an overshoot right here and then start unfolding on the bearish side. So technically speaking, this could be set for a possible drop. So that's my basically my 2 cents on that, right? And the way basically gonna synchronize this is, let's say for instance we WTI is gonna go to 71, 70, 71 levels, this box right here. During this OPEC meeting, if the scenario is bearish, right, then obviously we would see that move on the downside. Not sure where it's gonna go. Could be limited. Could I mean, it could not be. We'll see, right? Uh, but let's say if I were to look in, let's say June, right? Let's say June will be, let's say the end of June will be right here, yeah. So let's just let's just put a line on it, yeah, vertical line, and I'm gonna put it at the. Just give me 1 second. All right, at the end of June. So this is basically the end of June. Let's see if that would fit, right? So apparently it would fit just nicely, right? So time-wise, it does have enough time for this to occur, right? Now, back to 2 hour chart. Let me just go through this rising channel right here. So we have basically the main move right here, the A wave, then W, and then this represents the X for minor, minor X, minor scale red, right? Minor X red. The way this is unfolding is, the way I label this is as double WX, triangle in X, right? And then A, B, and then 1, 2, 3, 4, 5. And the way I'm seeing this, um, I'm sorry, okay, there we go. The way I'm seeing this possibly developing is as an ending diagonal. 1, 2, 3 to unfold right here, and then one more move to possibly give that ending diagonal scenario with an overshoot, of course. Now that overshoot would coincide so with the following thing with which I'm about to say. So we have 161.8 from W and X right here, which we can actually see in real time right now in this box. A reaction is occurring, and also I've drew this rising channel. Thus, let's say, preparing psychologically for the possible overshoot on the upside, right? So we have reaction of the 161.8. 100% of A and B was breached. That doesn't necessarily mean that it's it's gonna it's gonna go up, right? In an ending diagonal scenario, this would typically need to terminate this for this wave and then rise. So let's say, for instance, I believe that this has practically all the necessary tools. Now, an extension. Should an extension occur in this minute purple Y? If an extension would occur, then this will line up with a 200% of W and X. So one more up, one more level up, and from A to B, we surpassed 100%, so this means that we could possibly go to the golden ratio. So you can actually see how these Fibonacci lines are actually aligning. But the point is that it's not really aligning on the, it's not only aligning on the 4-hour chart, on the 161.8 of A and B and W and X 200%. If I go back and remind you guys, right, on the daily scale, W and X, they're aligning with the 100% right here, also aligning with the 50% of the drop of the C. So you can actually see that 70 and 71, I mean between 70 and 72 levels are quite important, I would state. So I'm very curious to see the reaction, right? Now, we'll basically see that tomorrow, yeah, and in the days to come. Now, another thing that I would like to leave you guys with is a small announcement. On on May 4th, yeah, the NFP, the non-farm payroll event will take place, and I'm gonna host a live webinar in which I'm also gonna trade, attempt to trade live if the patterns are favorable, right? So I'd like to invite you to that, and if you're an Orbex trader already, look out for the invitation. If not, then you may contact support and ask for the invitation, or just go on the Orbex blog. Now another thing that I'm gonna actually say is that May 4th is actually the Star Wars International Day. I know that's funny, but I'm gonna leave you guys with a funny thing right here. So may the 4th be with you, and on the 4th of May, on the NFP event, trade like a Jedi, we shall. All right. Once again, this was Richard. As I like to say to all my traders, stay in the green and many pips ahead.